Welcome back to the Tax Champion. Pat Mannix here, talking today about business structures and in particular the disaster that is companies when running under small business. Again, we need to go back in history and look at the year 1999, and the federal government of that year changed the rules on small business in particular, and they put in place the small business capital gains tax concessions, and they virtually wrote into the legislation that if you're not running under a family trust or a unit trust for your business, it is an absolute disaster, and especially if you're trading under a company structure. So it's a disaster. I'm going to explain it right now. It's easy, it's succinct, and nothing's changed. So here we go. I'll explain a small business structure here, or a small business under a company structure, and how it is an absolute disaster. So we've got a business here worth $800,000, and the family are going to sell under a company structure. When they sell, they get a 50% small business discount on their capital gains tax, so now they only have to deal with an amount of $400,000. The $400,000 is taxed at the company rate, which is 27.5%, and that's $110,000 in company tax. But this is the kicker, folks, and it kicks right where it hurts. $160,000 has to be paid in personal tax when you're trying to get hold of the $400,000 here, which is not taxed by the company. And that is the kicker, folks. Even though you're getting a 50% discount on capital gains tax for the company, it's when you try to pull that $400,000 out of the company, the tax office hits you with this extra $160,000. So in total, they kick you where it hurts at $270,000 in tax. That, my friends, is the company disaster when selling a small business under a company structure. And it gives me the absolute shivers when we have clients coming in and they're stuck in these company structures. Let's have a look at what happens in a trust. So, same business running under a trust. First of all, the trust gets a 50% discount. So only trusts and individuals running in business get this extra 50% discount on capital gains tax. So again, we're dealing with $400,000. The $400,000 then gets another 50% discount, and that's the same discount as what the company gets, which is a small business discount. So now we're dealing with a figure of $200,000, and the tax office allows us to put that $200,000 directly into superannuation. And you guessed it, folks, the amount you pay is $0 in tax. So that, my friends, is how you set up in business. Even today, when the tax office looks like they're squeezing out trusts, they are not. You need the right tax advice to do this. And some people say, oh no, I can't set up under a trust structure. It's so complicated with settlors and beneficiaries and trustees and trustees. Get over it. Trust in your accountant. Trust that they are going to put you into a trust. And here's a little bit of a comparison here. Look at the complication between $0 and $270,000. So I've said this before in another video, keep it complex, stupid, when you're running small business tax. I cannot put it any plainer than this, that you must set up your growing small business in a trust structure. And if you're advised on a company, get your head read. If you've got a growing small business and you've got a company structure, get your head read. Don't go back to your tax accountant, go to a psychologist, because you are in trouble. That's all I've got for you today, folks. A quick story, a succinct story. Get into a trust if you're not already, and if you're starting out and you're going to make some dough, get into a trust structure, because capital gains tax will kill you. See you next time at the Tax Champion.